JJ the CPA here. The taxability of the Paycheck Protection Program has become now a true source of rub now that it's in front of everybody. Now, what am I talking about real quick? The Paycheck Protection Program, for those that are employers, are not going to be able to deduct the money that was used from PPP that is then forgiven. For the self-employed, you're completely off the hook. In the body of this video, I am putting a link to a playlist about the taxability and that adjustment related to PPP forgiveness. So if you have anything that you'd like to look at further, other than what I'm getting ready to talk about, check out that playlist. But what I wanted to talk to you about here, November 24th, is my take as a certified public accountant related to the dissecting of the CARES Act, as well as the revenue rulings and the IRS notice that address this issue related to the tax adjustment related to PPP forgiveness. Also in the body of this video here, I'll put a link to the 2 revenue rulings by the IRS and the IRS notice. One of the things I think you'll note differently with my channel, for those of you that are not subscribers yet, is that I am a practicing CPA. The advice, the information that I'm putting together in these videos is aimed at my clients. In essence, you're able to listen in. And with that being said, you'll notice that when available, if there is advice that I'm providing you with or information, I always put a link to that third-party information, specifically, and most of the time, not to an article, not to some third-party media source, but directly to the SBA or the IRS or the Department of Treasury. So when you look at what the IRS has put out, where I have said consistently is that the IRS is following precedents. And not to toot my own horn, but before any client of mine got PPP, I was already telling them that they would not be able to deduct any of the proceeds that were then used for any of these expenses. I knew that my clients were going to achieve 100% forgiveness. All of them have. But when I was visiting with them about the planning for it, when I was going through and figuring out how to put it on their financials and the adjustments to make, I knew that the IRS was going to come out and indicate that we weren't going to be able to deduct the expenses that PPP used. But let me tell you this, the reason for the video is I feel like the IRS's argument, and I'm not saying it as a criticism to the IRS, it's just that the argument that they're providing in their revenue ruling, I think, is on thin ice. I think that it's fallible. I think that it's challengeable. Now, I will tell you this. I don't believe if Congress does not rectify this, or if Congress does not override the IRS, I'm not telling you that I'm going to challenge the IRS. What I'm saying is that I think it's challengeable. We do have a lot of time before we have to file the 2020 tax returns. Yes, taxes due throughout the year with quarterly estimated tax payments. Taxes due no later than April 15th for the tax of the prior year. You can file an extension, which then only extends your time to file, not your time to pay. But we have until October 15th of 2021 to file the tax returns for the individuals. We have till September 15th to file the business returns after the extensions filed March 15th. Why is this important? This goes hand in hand with why I'm actually still telling my clients we're going to wait to file. It's not about, well, why shouldn't I file? And then finding reasons that doesn't matter to then file. The reasonings are gathering as much information before you actually put something on paper to submit it to the government, ensuring you have all the facts and the circumstances. Many, many times when the law comes out, the IRS has to have time to go through and interpret that. And then they will come out with called proposed regulations, and then they'll come out with final regulations and clarifications. It's logical. I'm used to it after 28 years in the tax business of the IRS taking a amount of time to clarify and interpret how we go about it. So it's not unusual for me to be patient with my clients when providing tax advice in how are we going to act. And this is one of those circumstances that probably every client that I have, we will be filing for PPP forgiveness sometime early in 2021. I want to wait until after the next stimulus to have that much more information. Check out my recent videos talking about that in detail. But for those that we file the forgiveness on, we're going to get 100% forgiveness. The thing I'm going to be telling my clients, though, is that we should know where we stand, assuming that we are not going to be able to deduct whatever is forgiven. This is for the employers, not for the self-employed. And I want to wait until the last minute to file. Now, hear me on this. With my clients that I tell to file an extension, we actually statistically reduce their chance of audit. Now, it might be by this much, but we do. If you know your results, if you know where you stand, and you're hitting April 15th, you've paid in your tax, the IRS allows you, for this reason as well, to file an extension and file then on or before October 15th of the following year. Why do you think those that have small businesses that can have some complex planning wait? Many times it's to get a full understanding of a new tax law, ensure that the IRS does not come out with additional interpretations that could cause you to amend a tax return, filing in essence before you have to. I'm not a procrastinator in any way, shape, or form. Most of the business returns we have done in January or February. Most of my individuals we haven't done by April 15th. Now, for those of you that are just first tuning into my channel, welcome. I'd love it if you'd subscribe. One of the things that's also different with my videos is giving you a full context of the advice I'm providing to clients. Why? Because my clients don't necessarily just want to be told. We want to understand it together. That makes for better advice. If my client understands what it is that we're trying to accomplish, they can help me accomplish it that much better. They understand, those clients that have been with me for over 23 years since I started my practice, that there's value in being patient. There's value in waiting. With that being said, when you look at the argument that the IRS is providing, maybe it's not an argument, what they're laying down and saying, here's how it is, you will not deduct any amount of monies that have been used from PPP that are forgiven. Even if you don't know the forgiveness, you need to reasonably estimate it, and you will have to make that adjustment in 2020. They further stated that if you estimate incorrectly and it turns out you don't get forgiven for as much as you thought, or you're off in essence. You can make the adjustment in 2021 if you made a good faith effort and you meet all these qualifications, or you can amend the 2020 return. I've got videos that are in that playlist for you to go through to hear more in detail that. But the IRS indicates that the reason that you cannot deduct the expenses that you got from PPP that are then forgiven is because it's tax-free income. The CARES Act indicates specifically that PPP monies are not considered income. It's not to be included in gross income. It's exempt from being considered income. The IRS and the SBA have come out further and indicated that no Form 1099-Cs shall be sent out by banks to those recipients that received PPP forgiveness. A 1099-C, C for cancellation of debt, is what a bank or a lending institution provides to a borrower if they have to write off any portion of the loan. When the IRS and the SBA direct and make clear that no Form 1099-C should be sent out, they're making a very direct statement with zero interpretation that they mean anything else other than it's not income. The forgiveness of PPP is not income. You will not get a Form 1099-C. However, in their revenue ruling, in their argument, scratch that. I don't mean argument. What they've laid down of here's how it is and here's why. If you're now saying, well, it's tax-free income, okay? Therefore, any expenses traced to tax-free income, this is what the IRS is saying, then those expenses are allocable to the tax-free income. Therefore, those expenses are not deductible. They're saying that, hey, you got money and it's tax-free. Therefore, anything that you spend with that money is tied to that income, and that is why you can't deduct it. Now, what's different about PPP is that there was a directive of spending it in a specific amount of time. For most, it was understood to be 8 weeks. PPP came out April 3rd. It wasn't until in June that the 24-week actual law came into play where you would have 24 weeks to spend the money. Most had already spent the money. It could only be used on payroll, rent, utilities, and interest. Now, there are many, many grants, and most of them, federal or state, do have stipulations. They have strings. Here's what you need to use it for. But typically, that's not considered tax-free income. I'm not saying every single time, but it's here's a grant, you're using the money as directed. This specifically stated in the CARES Act, it's not income. I don't know that it actually then rises to the level of tax-free income. Now, let me be clear. I get it. When Congress says it's not gross income, logically we go, oh, that's tax-free income. Yeah. But when we're now really splitting hairs and we look at it, it's like, no, that is exempt income, as it indicated. This is exempt from income. Okay? It's not tax-free income, it's exempt from income. See the difference? I do. It's not tax-free, word tax. It's exempt income. Okay? The CARES Act, yes, didn't say it's free from tax. It said it's exempt. It is not considered gross income. Now, the IRS has come in and said, yeah, we agree. It's not income. You're not including it in your gross income. So right now, as it stands, the way that you would reflect it on a tax return, not self-employed, this would be on an 1120S, a Form 1120, or a partnership return, you would be showing this as a negative expense, a reduction of expenses, which, yes, results in the exact same thing as if it was included in the top line, or if it had been considered income. A negative expense is income, right? If you know accounting, you have debits and credits. A debit is an expense. A credit is income. To record a negative expense, it's a credit, the same as you recording income. Now, I'm not arguing that the IRS doesn't know the difference between debits and credits. I'm giving you a little bit of foundation here. But when you look at what's the difference between tax-free income and income that's exempt from being considered gross income, I think you now have two different mountains that you're trying to climb here. Now, the IRS did make it clear, crystal. The only way they're changing their interpretation is by an act of Congress. Now, I've said this in other videos, that typically when the IRS says that, that is the IRS saying, hey Congress, hey Congress, over here, here's what the tax law says. So if you want to override it, let me make it really clear what it says and what the position of the IRS is, the U.S. Treasury, so that if you want to do something about it, here's what you exactly have to do. So I don't think the IRS is trying to be mean. I don't think they're trying to interpret something that goes against the American way. I don't think they're trying to hurt small businesses. The IRS is interpreting law, and they have to be like a referee. Whether we feel it's fair or not, here's the rules, there it is, right? This might be one, though, if you were to look at the rules of baseball, it would be tie goes to the runner. Tie goes to the runner. But Congress has to say tie goes to the runner, which is the runner is the small business owner that got the PPP forgiven, and it's not includable in income. Let me be clear. I said it already. I am not going to challenge the IRS on this. My clients are expecting the tax adjustment. We are going to make the tax adjustment. But why is this key? Because there are those within, for instance, the American Institute of CPAs, the tax advisor, there's other very reputable, well-known, influential tax organizations, and I'm not talking about the big CPA firms, that help the IRS determine its policies or procedures or its interpretations. They work as liaisons between the IRS and Congress, especially the American Institute of CPAs, as well as the American Society of Accountants and the enrolled agents. Now, with that being said, why wait? Let me be clear. I'm not talking about waiting to file for forgiveness in this video. Listen to my other video related to that and the timing. I'm not talking about hoping and praying that I come up with some way to not make an adjustment. What I'm talking about is making the assumption the IRS is going to not be overridden as we're going into year-end tax planning, making that determination when you go to make your fourth quarter estimated tax payment due January 15th. If we don't have resolution by April 15th, paying your taxes and assuming that you will have the tax adjustment, employers, for PPP forgiveness. But waiting to file. See, this is the difference, and I am going to toot my own horn by saying this is the difference between JJ the CPA and most that prepare taxes. Okay? Most. Not all, but most. Is being patient, discussing with my client. So I know already 100% of my clients that got PPP that are going to get 100% forgiveness will follow my direction, my lead, that we're going to have it all fall figured out, solved. We're just not going to push the button to e-file and see what comes of it, which is a lot easier than filing an amended return. Now, let me be clear. Even if we filed a return, yes, you can go back and amend it. It's not like the IRS would say, oh, you already filed it, so sorry, you have to go with that position. You have 2 years to file an amended return for refund. But it's the fact of the matter of the hassle of filing the amended return. Me, though, let me now put the flip on this, okay? Yes, I would consider me, JJ the CPA, different from most, but here's the thing. I don't have a real voice. Right? I don't have a connection at the IRS other than the connections that you will in the small pond that I live in called Oklahoma, in knowing those that work for or knowing the Congress persons or U.S. senators, at least in terms of they would recognize me, let's just say it that way. No one's going to watch this video and then make a determination in Congress. No one's going to watch this video and make a different determination in the IRS. But if I'm coming up with this, right, there's going to be other law practices that specialize in tax that are huge, that have influence with these larger organizations that then have influence with Congress, for Congress to help understand how this all works and goes together. I can't be the only one thinking of this. So while you may 3 minutes ago, man, like, whoa, this guy's got a big ego. I have a healthy ego. Okay. I'm good at what I do. Right? Do you want to go into a brain surgeon that says, I'm okay? Or do you want to go into a brain surgeon that says, I am one of the best and I'm going to take great care of you? Well, I'm a brain surgeon when it comes to tax. But with that being said, the humbleness that's truly is that I want to give it time. There's no way I came up with this on my own. I haven't read it anywhere yet. This argument, this splitting of the hairs on the difference between tax-free income and income that's exempt from being gross income. So with the IRS, they also in their revenue ruling indicated that they were drawing a direct parallel. So I'm glad you stayed to hear, because here's a second maybe hole in the theory here, in the revenue ruling, if you will, is that if you're in a set of circumstances where you're now paralleling something to another part of the law, then you now look to that part of the law to figure out, well, what are the differences in that law compared to these set of circumstances? And with that being said, the parallel that was drawn was the gross income for an attorney that is a plaintiff attorney. So those that represent a client and they don't take a fee unless there's an award, unless there's a settlement, and then they take what's called a contingent fee. They take a percentage. Those lawyers incur expenses during the case that they then cannot deduct during the case until the case is settled. Okay? So when the case is settled, then they're able to write off those expenses, or it got pushed away and, thrown out of court, if you will. So with that being said, yes, that's been around forever, okay? That you cannot deduct expenses as a plaintiff's attorney until you settle or finish up the case. Now, typically, that attorney's going to get reimbursed those expenses at the time of settlement, and that's where the IRS is, in essence, providing a big hole. Because the parallel that they're pulling together is that you don't get to deduct the expenses until you recognize the income. Follow? They're saying, well, you don't get to deduct the expenses because this is tax-free income. And by the way, here's an example of that. You have an attorney and they don't get to deduct the expenses until they recognize the income. Whoa, whoa, whoa. That is not a parallel. These are not the same things. And here's the key difference. The attorney is at some point recognizing income or recognizing a loss in the sense of they spent money during the course of the case. No settlement is reached, it's thrown out of court, and they now have a loss. That's when they then get to recognize the expenses. This is all the argument by the IRS, or what the argument is using. The IRS is using as their reasoning on what they put out. Or the attorney then settles, they get reimbursed those expenses, and then that's when they get to recognize those expenses. But that was an event that eventually there was income recognized. With PPP, the income is never recognized. It is exempt. So those are the two things that I think will really be examined, because that's the fun of the tax law, is really understanding it, understanding the history and the totality of the tax law, the history of, well, if you're doing this and the result is this, well, that's because there's these facts and circumstances. So if we're doing this, is it the same as this? And if it's not, what is different? And then how are those things different that then puts you on a different plane to go, well, I don't know if that argument's going to work or prevail. That's how I approach anything that I do with my clients. We don't necessarily go, well, and I'm going to use the Bible here for a second. I never go, well, when Peter had said this and then Genesis said that, so if I put the two things together, well, I guess we can. No, this is going, well, if Peter says this and you're saying this, is that even the same circumstances of what Peter said? You're saying this, is that what happened in Genesis? Those two things together, is that what happened here? So I'm from Oklahoma. We use that kind of jargon, if you will, in comparisons. So with that being said, let me make it crystal clear. I am not giving you advice to not recognize the tax adjustment. You should recognize the tax adjustment November 24th, 2020, until IRS either comes up with a different interpretation that either gives you enough room to figure out if you can or can't, and or Congress comes out and specifically overrides this. You absolutely should be working with a tax advisor that understands your tax circumstances if you're going to take a position any different from what I indicated to you, which is you will reduce down your expenses by the amount of your forgiveness, not for the self-employed. Self-employed being the ones that file a Schedule C and a Schedule F. So I'm not afraid of the IRS, right? They have a rule book. I get to read the same rule book. We follow the rule book. There we go. When you get an IRS audit, IRS inquiry, all they're going is like, hey, did you follow the rules? And you go, oh, yeah, I did. Okay, great. We're moving about our business. Not at all. Am I indicating to you that, oh, here's a way I don't plan to make the adjustment, but here's a way that either Congress can see, hopefully in the bowels of Congress with all the experts surrounding our congressmen and congresswomen and senators to be around this, to understand this, to see the minutia. And there's no way that there's not attorneys and CPAs that are in the larger organizations that then are able to help the national organizations that represent EAs, tax professionals, accountants, and CPAs that then work in conjunction and as a liaison between Congress and IRS aren't gonna see this. I just haven't seen it yet. So the one thing I want you to note on this video, if you've made it to here, is that I appreciate you tuning in. I appreciate you listening. This was definitely meant to be a commentary, to take my time to unravel this, to share with you my thoughts. I will always be mindful of the time, but on this one, it's commentary, it's food for thought, and maybe, just maybe, someone in the know that has influence might see this. And they might be in a set of circumstances to go, So with that being said, I'm going to be putting together, and you're going to say, well, why didn't you tell me that before you got all the way to here? I am going to be putting together a quicker, shorter video that talks about this that I'm going to release on the Monday right after Thanksgiving. And I will be sending some links to people that I know within the offices here in Oklahoma, of those that are in Washington, just saying, hey, something to think about here. So you'll see that video coming out. I'm also going to mention to you, because if you've made it to here, most likely you enjoy what it is I have to share, but I will be announcing and sharing with you a way to join the YouTube membership for my channel. And these kind of videos will be in that membership, the commentary, if you will, and it will be that more the shorter videos, the quick how-tos will be in the public eye. The membership will be for the smaller group of you wonderful people that are interested in the longer commentary and providing some additional types of videos that aren't really as popular to the public that usually you're wanting to hear and pay attention to. So things like, what do you want to talk about, and insurance, and knowing your numbers, and Group 300, specific videos to CPAs, specific videos related to insurance, and detailed tax planning and how-to on the tax planning. And in essence, a channel that represents what I'm talking to my clients about, which is more than just this, almost on a daily basis. So it's a way to almost step into the position of hearing the same advice that I'm providing to clients as we especially go out of this era of PPP and EIDL, which most of that's most of the STEAM part of my channel, if you will. The membership will be what sustains. So I'll have different levels to that. I will make the first level very accessible and very inexpensive. I don't want to alienate anybody. And then if there are some special additional things that I know is providing massive value that is going to save the listener thousands and thousands and thousands of dollars of taxes potentially every year for the rest of their career, and it's advice that I'm giving to my clients at $400 an hour, that level of video and advice very well may be at a minorly more expensive level of membership. So stay tuned for that. All right. Hey, if you made it to here and you're not a subscriber, thank you so much for hanging in, tuning in. I really appreciate it. And then don't you ever forget, you've never met a CPA quite like me. All right. Hey, have a great one.